Okay, so you've sent over this really interesting pile of information this time. We're diving into a biotech company, Tevogen Bio Holdings, ticker's TVGN.
That's the one.
They're playing in that, cutting edge space, immunotherapy, AI, aiming for these affordable, off-the-shelf T-cell therapies.
Right. A bit different from the usual personalized stuff.
Exactly. So our mission today, basically, is to figure out, is this actually revolutionary, or is it just another, super high-risk biotech gamble? Let's try and unpack it.
Sounds good. Yeah, there's a lot here.
Hopefully by the end we'll have a clearer idea of, well, just how big that gamble really is.
Okay, so where do we start? The core business, I guess.
Yeah, let's do that. What exactly is Tevogen doing?
Okay, so they're what's called a clinical stage immunotherapy company.
Yeah.
And their big focus is on these off-the-shelf T-cell therapies.
Off the shelf meaning?
Meaning they come from healthy donors, not the patient themselves. And crucially, they say they're not genetically modifying these cells. They use their own platform, as exact cell, they call it.
So they're using, untouched T cells from donors.
Exactly. That's the key insight, potentially. They think this might avoid some safety issues you see with gene editing.
Right.
And maybe make it easier, cheaper to manufacture, more scalable.
Right. And these T cells, these CTLs.
Yeah, CD, plus cytotoxic T lymphocytes, fancy name. But the idea is they target specific markers that are only on the disease cells.
Okay, so that links to their business model, right?
Yeah.
Affordability, accessibility. That sounds pretty different in the cell therapy world, which is usually, crazy expensive.
Yeah, totally. That's their main pitch. Plus, they're adding this AI layer, Tevogen.ai, PredictCell, trying to speed up development, maybe cut costs down the line.
So how do they actually make money? Or plan to? Because right now...
Yeah, that's the million-dollar question, maybe billion-dollar question for any company like this. Right now, no revenue, zero products on the market.
Okay.
So they're completely dependent on outside cash. They got funding from that SPAC merger back in February 2024.
Ah, the SPAC route. Quick way to go public.
Yep. And they've also sold preferred stock, taken on debt, even got some grant money. But looking ahead, future money. It all hangs on clinical trials, working out, getting regulatory green lights, and then actually selling the stuff.
So partnerships, maybe? Licensing deals?
Could be. Direct sales, licenses, big pharma partnerships, all possibilities, but way down the road.
Now, something else you flagged, this Tevogen Generics division, that sounds different. How does that fit?
That's a really good question. Because, yeah, it feels like a bit of a left turn, doesn't it?
It does.
Their main thing is super innovative, complex cell therapies that needs deep science, big R&D investments, specialized manufacturing.
Yeah.
Generics. That's usually a totally different game. Low margins, high volume.
So is it a distraction, or is there some strategic genius we're missing?
It's hard to say for sure, but you definitely have to wonder about resource allocation. Are they spreading themselves too thin, diverting cash or, management focus away from the main immunotherapy pipeline when it's still so early?
Questionable. Okay, let's zoom back in on the core products then. The exact cell platform. You said unmodified CTLs targeting specific markers. How does that work exactly? How do they pick the right cells or targets?
So the emphasis is on natural T cells from donors. Unlike CAR-RT, where they engineer the patient's cells, Tevogen finds healthy donors whose T cells already seem pretty good at fighting certain diseases.
Ah, okay.
They claim this lets them target multiple markers or antigens found only on the bad cells, which could make it safer, less likely to attack healthy tissue. And they keep talking scalability, potential for hundreds of doses from just one donor.
Which loops back to the cost thing.
Exactly. And making it maybe an outpatient treatment. They think this platform could work for viruses, cancers, even neurological diseases. It really hinges on finding the right donors whose T cells are already primed, so to speak.
And the lead candidate using this platform is TVGN 489 for COVID.
Yeah, that's their most advanced one. It's an allogeneic CTL therapy, again, from donors designed to recognize multiple parts of the SARS-CoV-2 virus. Not just the spike protein, which is smart, right? Helps deal with variants.
Makes sense. How far along is it?
They finished a phase 1 safety trial. Looked pretty good, apparently. They said no dose-limiting toxicities, no serious side effects like that cytokine release syndrome you sometimes hear about with cell therapies.
That's a big one.
It is. And they saw some early hints it might be working, reducing viral load, symptoms getting better. So potential maybe for acute high-risk COVID, long COVID, people with weak immune systems.
Okay. And beyond COVID, what else is in the pipeline?
Yeah, they're not just a COVID play. They've got preclinical stuff. So very early stage for HPV-related cancers, lymphomas linked to EBV, even looking at EBV's connection to multiple sclerosis.
MS? Interesting.
Yeah, and another MS candidate, plus a T-cell vaccine idea. So they clearly think the platform's got legs beyond infections.
And the AI part, Tevogen.ai, predict cell. What's the goal there?
Basically using AI and machine learning to find new T-cell targets faster. They hope it can help them understand the immune response better, design smarter clinical trials, and maybe bring down those huge development costs.
And they've partnered with Microsoft, Databricks.
Right. Signals they're serious about the tech side, or at least want to appear serious.
So putting it all together, where does Tevogen stand right now? Market position, size?
Tiny. As of mid-April 2025, they're definitely clinical stage, micro-cap. Market cap was bouncing around like $175 to maybe $197 million. Very small team, too, under 20 people. And pretty newly public through that SPAC last year. Trading is TVGN.
So classic microcap biotech. High risk, potential high reward, but mostly risk right now.
Pretty much sums it up. Yeah.
And their main pitch, the value proposition.
All it comes down to affordable, accessible, safe immunotherapies. That's the dream. Built on their unique tech, the donor approach, scalability, AI boost, tackling big diseases. It's aspirational, for sure. Needs a lot to go right.
Okay, so that answers the first big question. What do they do? How do they make money? Answer. Developing therapies, no money coming in yet, funded externally, future depends on success. Right. Let's shift gears. Management. Who's running the show? Track record.
This is always crucial, right? Especially early on. It's led by the founder, Dr. Ryan Saudi, background in medicine, public health, business.
Okay.
The company talks up their rapid progress under him, getting into trials quickly, and they've made these claims about high valuation on low spend.
High valuation according to whom? And low spend compared to what? Need specifics there.
Exactly. You have to scrutinize those claims. The rest of the team has folks from bigger pharma biotech, which sounds good on paper, but their track record in late-stage development and actually getting a drug approved and sold, that's unproven.
So Dr. Saudi hasn't taken a drug all the way before.
Doesn't seem like it. Not a novel therapy like this. The experience might be more early stage or in different areas. Bringing something totally new to market is a different beast.
How do they handle pressure? Any crises we can look at?
Nothing major operationally that's public. The main public crisis seems to be the stock price just tanking.
Right.
Management has put out press releases about that, talking about the long-term vision, how much stock insiders own. Tends to sound a bit defensive, maybe. Reassuring talk, but maybe not directly addressing why the market's so skeptical.
And communication generally, how transparent are they?
Well, they put out a lot of press releases. Partnership news, clinical updates, AI stuff. They file with the SEC. But the tone, often very optimistic, promotional. Sometimes they highlight internal numbers or metrics that the market hasn't really bought into.
Like the valuation claim.
Yeah, and the fact the CEO had to publicly clarify what an S1 filing meant suggests maybe their communication isn't always crystal clear. Plus, we saw they filed some SEC docs late a couple of times. Minor, maybe, but could hint at internal control weaknesses.
Ethical reputation. Anything worrying there?
Nothing overtly bad has come out. No major scandals. They talk a lot about their mission for patients, ethical AI. But, that promotional style, the weird generics division, some might question the transparency or strategic clarity. But no smoking gun ethically, based on what's out there.
So the big management question, honest, capable, shareholder-oriented, where do we land?
It's tricky. Honesty, probably okay. But the communication is definitely promotional, capable for the future. This is the huge question mark. They have some experience, but the biggest challenges are ahead. Shareholder-oriented. Well, insiders own a ton of stock, like 74% or more.
Wow, that's high.
Extremely high. So you'd think their interests are aligned, but that hasn't helped the public stock price so far. So it's a mixed picture.
Okay, let's talk money allocation. Where's the cash going?
Mostly where you'd expect for a biotech like this. R&D is the big one, pushing TVGN 489 forward, the earlier pipeline stuff, building out that AI platform, and manufacturing. That's critical for cell therapies. They need their own facilities eventually, so they've got R&D labs, plans for proper GMP manufacturing. Seems like they're lining that up.
But then there's the generics division again. How does that fit the capital plan? Seems odd to spend money there.
It really does seem questionable from a capital perspective.
Yeah.
You're a small company, burning cash on super complex, high-risk therapies. Why divert money, and just as importantly, management time, to a completely different, low-margin generics business? The synergy isn't obvious at all. Feels potentially dilutive to the core mission.
Right. What about M&A, buybacks, dividends? Any action there?
M&A was mainly the SPAC deal itself. Going forward, maybe they'd look to buy manufacturing capabilities. Share buybacks? Nope, not typical for this stage. Dividends? No, not on the common stock and none expected. They do have some preferred stock, Series C, that pays a dividend, though.
Okay. And metrics like return on invested capital, meaningless right now.
Pretty much. Pre-revenue, big losses. ROIC calculations wouldn't tell you anything useful. You just have to view their spending as long-term bets, highly uncertain.
So are they using capital effectively? Too early to say?
Yeah, it's really premature. You can argue both ways. They are investing in R&D and manufacturing, which is necessary. Insider ownership is high, but they're burning cash fast. The stock's done poorly, and that generics thing is a head-scratcher. So jury's out. Definitely speculative.
Okay, let's pivot to the raw financials then. What's the health situation look like? Balance sheet, income statement? I'm guessing not pretty?
No.
Yeah.
Not pretty is accurate, as you'd expect. Zero profitability. They're pre-revenue, big operating losses. Fiscal year 2024, the operating loss was like $53.6 million.
Ouch.
Yeah. The net loss looked better than the year before, but that was mostly a non-cash accounting gain from converting debt during the SPAC, not actual operational improvement.
What about debt? That can sink companies like this.
It's a bit complicated. They had a lot of convertible debt before the SPAC. A big chunk of that got turned into equity in the merger,
Right.
which helped the balance sheet, reduce liabilities.
Okay.
But since the merger, they've taken on new debt, notes payable, a loan facility. So while the total debt might be lower than peak levels, they're clearly still needing to borrow. They can't fund operations or debt payments from cash flow.
And that cash flow burning fast.
Oh, yeah. Significantly negative free cash flow.
Yeah.
All that R&D, planning for manufacturing, it eats cash. Again, typical for this stage, but it just highlights how much they need to keep raising money.
So standard metrics, PE, price book, forget about those.
Totally irrelevant, no earnings. Negative book value because of all the accumulated losses. These ratios are just distorted. The market's valuing them purely on potential, not current financials.
So bottom line on financial health. Profitable, strong balance sheet.
Definitely not profitable. And the balance sheet, improved post-PAC debt conversion, maybe, but strong? No. Negative equity, ongoing reliance on financing, not what you'd call robust.
And financial stability overall. Any other red flags waving?
Well, the whole picture points to instability, right?
Yeah.
Which, again, comes with the territory for early biotech. No history of earnings, just losses. No dividends. New debt taken on recently. And their working capital looks tight, low current ratios. Suggests they could face short-term cash crunches.
Okay, let's pause there for a sec. First half summary. Tevogen, high potential tech, focused on affordability, which is interesting, but huge risks. Management has some experience, but unproven where it counts most, financially. Pre-revenue, burning cash, needs funding, balance sheet is weak. And this weird generic strategy hanging out there. All right, welcome back to the deep dive. We've covered Tevogen's business, management, financials. Now let's get into how the market sees this company. What's the general feeling out there? Does it match what we've discussed?
Well, the market seems pretty darn skeptical. Risk-averse might be putting it mildly. You see it right in the stock price. Big drop since this PAC.
Yeah, it hasn't been pretty.
And like we touched on, very little institutional money is involved, which sort of echoes that skepticism, right? Management's even had to come out and talk about the volatility short sellers.
Yeah.
That tells you the sentiment isn't great.
But it's funny, you look at the analyst ratings, totally different story.
It is. That's a key disconnect. The analysts covering them, granted it's probably not many, seem overwhelmingly positive. Buy ratings, strong buy. And their price targets are way, way above the current price, like suggesting huge upside.
So who do you believe? The market price or the analyst targets?
You have to be really careful with those analyst targets for companies like this. They're super speculative based on things working out perfectly years down the line. Clinical success, approvals, sales, it's all assumed. So take them with a big grain of salt.
What about news? They put out press releases all the time. Any impact? Partnerships, AI stuff, generics.
They're definitely active communicators. News about partnerships or grants might give the stock a little bump, for a day or two, but nothing seems to stick or fundamentally change that negative trend.
And the generics news? Maybe that hurt sentiment.
Could have. Some investors focused on the pure biotech story might see that as a distraction, like we discussed. Strategic dilution concerns. Even highlighting the high insider ownership hasn't really turned the tide.
Okay. And short interest. Are people actively betting against Tevogen?
Yeah, there's definitely some short interest. Moderately high as a percentage of the shares available to trade, maybe 5, 9%. And the cost to borrow shares to short them is pretty high too, suggests decent demand for betting against it.
What does that mean, cost to borrow?
It means lenders charge a high interest rate for shares used for shorting. So people are willing to pay a premium to bet the price will go down. And the days to cover, how long it would take shorts to buy back shares, it's a few days. All points to bearishness and adds to the volatility.
Got it. Okay, let's talk ownership. Who actually owns the shares? That structure sounds pretty unusual.
It really is. Institutional ownership, think big funds, mutual funds, is incredibly low, like 1.3, 1.4%, mostly just index funds that have to own a bit of everything.
So no big institutions making a conviction bet here.
Nope. Lack of institutional conviction is clear. But then, flip side, insider ownership is sky high. We mentioned 74, 79%.
That's massive. Mostly the founder, Dr. Saadi.
Presumably him and other early insiders, yeah. So strong alignment on paper, they want the stock to go up.
Yeah.
But it also means ownership is super concentrated. Very few shares are actually out there trading freely. The public float is tiny.
And that makes the stock price jump around more.
Exactly. Low liquidity, high volatility, small buys or sells can have a big impact.
With insiders controlling so much, what does that mean for corporate governance? Who's watching out for the little guy, the minority shareholders?
That's the concern. They do have independent directors on the board, supposedly. But when insiders, especially the CEO, control that much stock, their influence is huge.
So they basically call the shots.
Pretty much. It limits independent oversight. You need extra scrutiny on things like the overall strategy, like that generics move executive pay, any deals done with related parties, like that loan from the Patel family you mentioned. Are those decisions truly best for all shareholders? It's harder to be sure.
Okay, we'll try to pull all these threads together. SWOT analysis time. Strength, weaknesses, opportunities, threats. What are Tevogen's core strengths?
Okay, strengths. The exact cell platform itself, that unique approach with unmodified donor cells, that's potentially a big one. They own the IP. They have that positive early safety data for TVGN 489. And, the leadership team does have experience listed on their resumes.
Right, no, the weaknesses. Probably a longer list.
Yeah, quite possibly.
Yeah.
Obvious ones. Pre-revenue, history of losses, cash reserves are limited, manufacturing at scale, totally unproven. That generics division strategy looks ambiguous, maybe risky, heavy reliance on more funding, stocks volatile, and hardly any institutional owners.
Okay, opportunities. Where could things go right?
Well, the whole T-cell therapy market is big and growing, especially for off-the-shelf approaches like theirs. If exact cell really is safer and cheaper, that's a massive opportunity. The AI platform could genuinely help. They're targeting major diseases with unmet needs. And, maybe they strike a great partnership deal or even get acquired if things look promising.
And finally, the threats. What could derail the whole thing?
Lots of things. Clinical trials could fail. That's the biggest killer in biotech. Regulatory agencies, FDA, EMA, might not approve it or demand more data. Competition is fierce. Big pharma, other biotechs are all over this space.
Manufacturing, too.
Absolutely. Scaling up cell therapy manufacturing affordably is a huge challenge. Funding could dry up if results disappoint or the market sours further.
Right.
That negative sentiment itself is a threat. And yeah, those potential 2025 U.S. pharma tariffs, even if they say they're insensitive, need to watch that.
Okay, so wrapping it all up, brief conclusion. Where does this leave Tevogen?
It's really that classic early-stage biotech story, isn't it? High risk, high reward potential. The core idea, the tech, the affordability goal, it's intriguing. But the hurdles are immense. Clinical, manufacturing, commercialization, huge mountains to climb.
And the insider ownership versus market skepticism.
Yeah, insiders clearly believe owning so much stock. But the market, totally unconvinced right now. And that generics thing just muddies the water. So is it a revolution or a gamble? Right now, it leans heavily towards gamble.
So back to that initial question, revolution or gamble. Yeah, sounds like it's firmly in the high-stakes gamble category today. The potential might be there way down the line, but it depends entirely on them hitting milestone after milestone. Clinical results, manufacturing, those are the things to watch.
Absolutely. Make or break stuff.
What stands out to you as a single biggest question mark right now?
Single biggest. Probably still the clinical execution for TVGN 489 and proving the platform actually works safely and effectively in larger trials. Everything else hinges on that.
Makes sense. And hey, for more deep dives like this one, folks might want to check out the Stock Analytics AI YouTube channel.
Good suggestion.
Just a reminder, of course, this analysis is based on info available as of April 17th, 2025. AI helped us sift through the data, but The analysis, the interpretations, that's us.
Yep. Human brain still required.
For now. So, if you like this deep dive, want more listener-focused analysis, please do subscribe to the deep dive. And one final thought to chew on. Tevogen wants to make these advanced therapies affordable, but can any company really do that alone? How much do we need bigger shifts, in how healthcare pays for things, maybe government rules, to make that vision a reality across the whole industry?
That's a huge question. Goes way beyond just Tevogen. Something to definitely think about.
It is. All the sources we use today are in the episode description. Thanks for joining us.
My pleasure.
We'll be back soon with another deep dive into the info you send our way.